Welcome to another Coffee with Samso. Today we're at Blacksmith with Scott Williamson from Blackstone Minerals. Welcome back. Your second gig. Must have liked it the first time.
Yeah.
It'd be good. I mean, and Scott, you guys have done, obviously, it's been a few months since we spoke, and obviously you guys have progressed. I know I've noticed, looking at your announcements and things, that you've started drilling on site.
Yeah.
So maybe just give us a quick update from that.
Yeah, no worries. So since we last spoke, we started drilling. Initially we started with our own one rig. We very quickly added a second rig. We've gone and raised $4.5 million recently, and now we've got the cash to put in another couple of rigs. So we're looking to put in a fourth rig in any day now, and really just going all for this resource here. So the Benfoot disseminated ore body is a very large ore body. So we've got 4 rigs that will drill that out over the next 6 months. So we'll just systematically continue to drill this ore body. What we're seeing is the ore body's delivering better numbers than we'd hoped. Previous owners really only assayed for nickel. So we're also doing the full suite of assays, so copper, cobalt, platinum, palladium, gold. Particularly of interest is the palladium and platinum numbers that we're seeing. So we always knew that being a magmatic nickel sulphide, there was a chance of PGE credits. We're getting up to 1 gram per tonne in platinum plus palladium plus gold. That's a significant byproduct credit, we think, if we end up with an open pit mining scenario. So we're pretty excited to really understand what's driving the platinum palladium. Is there more of it? Is it going to be higher in different zones? Like, we're thinking it could actually get higher grade as we head to the north. So that's really, I suppose, surprised us. But it's all go. Like 4 drill rigs, drill out phase, heading towards maiden resource over the next 6 months. We've already kicked off a scoping study as well. So we're lucky we've sort of got a commodity that's been appreciated by the market. We were able to raise some good money, and $4.5 million goes a long way in Vietnam. So we can drill this ore body out very cheaply. We're sort of talking less than $80 a metre, all in cost. So that includes geologists, assays, everything. So it's amazing what we can do with a very small amount of money. We can drill out this ore body and we can show the market very quickly exactly what we've got. So yeah, pretty excited to really show the market what this Benfoot ore body looks like.
I mean, I had a look at your announcement where you guys had a couple of cross sections there. I mean, those kind of insets it's consistent with what you're looking for. I assume you guys are, because the last time we spoke to you was either you were chasing the disseminated ore as opposed to the sort of high grade, narrow kind of structures. I think those, that was, I think, your first phase of drilling, I believe. And that's basically what you guys are seeing.
Yeah, so we're sort of continuing with that first phase, and so what we're seeing is we're getting up to 1% nickel. So disseminated sulphide is something a lot of people don't really understand, but you can get up to even towards 2% nickel in disseminated, and so we're getting very good widths of sort of 20 to 30 metres at 1% nickel. 1% nickel is equivalent to plus 3 grams gold. So I think at today's nickel price, it's maybe 3.5 grams gold. Obviously, you need to put a recovery and a payability on that. But we're thinking that if we can deliver a nickel sulphate, the payabilities could actually be a premium to the nickel price. So I think a lot of people still trying to understand, what does 1% nickel mean? What does a disseminated nickel sulphide ore body look like? Everyone sort of knows massive sulphide, and the difference being in Western Australia, our massive sulphide ore bodies are all underground. So this is a disseminated sulphide ore body, but it's most likely going to be an open pit. So because of the low labour costs, the low power costs, we can get those operating costs very low for an open pit mine. So we're looking at something that's very similar to, say, the Mount Keith ore body in Western Australia. Mount Keith, an ore body that has been around for 20 years, a lot of people in the sort of ASX market don't really understand or really sort of focus on BHP, but this is one of Australia's best nickel mines, and it only has a head grade of 0.6% nickel. So when we're hitting big broad widths of 1% nickel, that's a great result for us, and particularly because we'll have lower power costs than Western Australia. So we've got hydro grid power, lower labour costs, so we can get those mining costs lower, and very good strip ratios. So some of those sections aren't really giving us a good understanding of the strip ratio, because that will actually get lower and lower as we go to the north. So we've actually drilled the deepest parts of the ore body first, and as we head north, the strip ratio will actually even get better again. So we'll see that in the next few drill results.
I just pulled up your section there. I mean, 29 metres, 27 metres, to me sort of gives you some sort of indication that you've got that broad zone you're talking about. Yeah. Historically, are they the same kind of?
Well, historically, there was no focus on this ore body. So historically, we knew that there was going to be some good intercepts of nickel, but we didn't expect the platinum palladium. It hadn't been assayed for. Yeah. So historically, this ore body, this disseminated ore body, was actually drilled in the 1960s. So you can sort of see, like, the assay technology back then was nowhere near as strong as it is now. So they didn't have the ability to assay for some of these platinum, palladium, gold. We're also looking at other elements like rhodium, and we sort of knew that there was going to be some good intercepts, but they're actually coming in better than the previous historic drilling, which was done in 1960s.
It's very interesting. Obviously when we spoke, I sort of got an idea where you guys are, and then I did my research and had a quarter of an idea of what's happening there. Just on my recent trip to KL, I met a group that had a project just across the border from you, actually, literally, in Laos itself. There's a major structure that runs east-west, not far, inside Laos, and they've got their project within there, and they were coming up with some beautiful rock chips, surface stuff, look, the blue colours and the greens and all this, and then I started telling them about what you guys had. I mean, that area there is fairly mobile, right? I mean, you got some major things happening there on your side, and you're seeing all these things, and obviously historically you got the nickel run all the way up to China, and then you're seeing this sort of mantle type kind of minerals coming out on your side. I started thinking, mate, this place must be, because one of the things I asked the guys, well, are there mines around? Because he said, no, this is all very close in Laos itself. Yeah. So this could be, I coined the term, the Asian Zambian belt, I mean, now that you guys I looked at your thing and I started seeing this, and obviously it's sort of perk your interest on your side. Maybe, there's more to it than just nickel in this zone.
Oh, definitely. So, yeah, it's interesting you talk about the east-west. We've been focused obviously more on that north-south trend, which is that major rift zone that goes up into China. There's definitely plenty of other opportunities around. We know of a really good copper-gold porphyry target, which is up to the north near the border, along that north-south trend. So, yeah, definitely a lot of that sort of deep tapping mantle sort of geology. We're in a system that is very similar to, say, Jinchuan in China, which is one of the largest nickel sulphide ore systems in the world. We're also the same age setting and tectonic setting as Norilsk. Norilsk is very interesting that Norilsk also has some really strong palladium and platinum credits. So the Norilsk mines are some of the best palladium mines in the world. I was looking the other day, 40% of Norilsk's revenue comes from palladium. And so it's not surprising that we're seeing these really strong platinum palladium numbers in a very similar geological setting, but also very similar age dating. So it was really the geology that really attracted us. Being such a technically driven board and a technically driven team, it had to tick all the boxes on the geology first. And what we've found is that with the groups that we're talking to, they need long mine lives, 10, 20-year mine lives. You're not going to get that from any other geology than this magmatic nickel sulphide. These systems will deliver 10, 20, 30-year mine lives, and we're just scratching the surface. Like, you talk about rock chips, like we've got massive sulphide veins outcropping that go for 2-3 kilometres, never been drilled, within hundreds of metres of a concentrate. So you'll never get that anywhere in Australia. If there's a massive sulphide vein at surface running 2, 3, 4, 5% nickel, copper, these will be drilled. In Australia, they're all drilled. They're drilled out and they're mined. There's nowhere else in the world where you're going to have massive sulphide outcropping at surface for kilometres untested. So, yeah, it's untouched. The reason it's untouched is because there is a concentrate tariff. So a lot of groups would have gone in and said, well, there's a tariff. If I ship a concentrate, I'm going to pay 20% straight to the government. And so a lot of groups would have looked at this asset and said, well, that's going to kill the economics. We looked at that and said, well, okay, well, the government wants us to head to the downstream process. The battery end users want us to head into the downstream process. Let's do it. Let's have a look at, well, what does it actually cost to build a pressure oxidation plant or a downstream process for nickel to deliver nickel sulphate and remove or reduce that tariff. So we've looked at it completely different than previous owners, but I think it's that tariff which has really stopped the investment or sort of hindered the investment from foreign companies. That tariff on copper is 40%. So it's really not encouraging junior and greenfields exploration. But if you can work with it and you can sort of see where the government wants to go with it, you look at the benefits being hydropower, low labour costs, one of the best manufacturing jurisdictions in the world, why not go downstream? Like, even if there wasn't a nickel mine there, this is actually one of the world's best jurisdictions to build a downstream nickel process, because we're on the doorstep of China, South Korea and Japan, which are all the major battery players. So we can upgrade nickel concentrate from out other places around the world. We can ship it in, upgrade it and send it on to these battery players. So yeah, the geology is world class, and we haven't even started. Like, we're about to mobilise our own EM, IP crew. We're going to just systematically test this whole field. There's 25 targets that are outcropping. Really exciting is, well, what's underneath? What's not outcropping? And that's where we're going to uncover something that's pretty special.
I think, in today's corporate market, obviously we've discussed this. I've just been on a roadshow and talking to people. I find that the scene has changed in a way that the market's looking for something more than just a postage stamp. They're looking for more than just a short-term story. They like that long-term story. I mean, when I first talked to you guys, I like the whole fact that you must be tapping something deep-rooted, because what you're getting, and that whole zone, like that whole zone has that potential there, and obviously then, in some ways, you're forced to go downstream, which is good in the sense that, you're on the doorstep of your market in a sense. You're not shipping it from down south of Perth and things like that, where you got distance issue. And I think that's what I like about the story, what you guys bring to the table. And I know you're bored and everyone's sort of proven to do things. So, I mean, are you seeing that when you talk to your, your money guys and things like your market? Are you seeing that kind of change in thinking in terms of what they're looking for? Yeah.
So, what we've got is a once in a sort of generation opportunity where a junior miner can actually bypass the traders and the major players, being BHP, Glencore, and go, all right, straight to the end user. Let's chat to the end user. The end user will help us fund this. So, as you know, the being a tough capital market, it's all about minimising capex, minimising dilution at the corporate level. So what we're seeing is that the equity holders are very happy for us to partner at the asset level on a downstream process. So it really resonates well with your sort of conventional equity investors, because we can hopefully bring in a big partner, help fund this downstream process, minimise dilution at the corporate level, but also have full access at the upstream sort of mine gate level, and then, but also through that partnership, have access to increased payabilities. So previously a nickel miner had to sort of sell a concentrate to a larger player. and they get stung on the payabilities every time, and so you're getting sort of 70, maybe 80% at best of the nickel price. You do all the hard work, and then you give 30% back to the refiner. So now we can grab back that 30%. So if we can get all the way to sulphate, we're looking at sort of 100% payability, maybe even sort of a premium to the nickel price. So it's really resonating well with investors, particularly through Asia. So the Asian investors that we've met through Hong Kong and Singapore really understand the Vietnam growth story. So we're talking to groups that saying Vietnam is one of the best growth stories in Asia right now. So Vietnam is the next China, it's the next South Korea, it's the next Japan. So we don't have to go through that process of sort of bringing them up to speed on what Vietnam's all about. So they're looking for Vietnam focused investments. So, and then we sort of link in with the EV thematic, the fact that we're well advanced with end users, the fact that we're not going to dilute too much at the corporate level, we're going to minimise capex to get this thing into production, then use the cash flow to go to the next stage and really ramp it up. So yeah, it is resonating well. We think that we think Asia's really going to really understand where we're heading with this, and the nickel price starting to run also helps as well. So everyone loves it when the underlying commodity starts to run. That's obviously helping with getting investors sort of understanding and really watching the story.
I mean, I don't think there's any doubt that sector, that region of Asia is booming. Cambodia, Laos, Vietnam, and Myanmar too. But Myanmar has probably 20 years sort of behind these guys. Things are already picking up in Vietnam so much that the neighbours like Cambodia and Laos are getting the crumbs, as you may say. But I mean, look, in terms of your expectations when you went into this project into Vietnam, I mean, you mentioned that the cash spend is a very, you get a long way with your dollar. Is it matching your expectation, you feel?
It's actually coming in cheaper. So the cost of doing business is exceeded our expectations on the downside. So it's cheaper to operate than we expected. So that's a positive. The geology's probably coming in better, particularly because of these byproduct credits. So there's a positive there. So if anything, it's exceeding our expectations. The ability to get things done has definitely exceeded our expectations. This is a culture where these people just want to get things done. So they want to roll the sleeves up. They want to move this asset back into production, and the government has been so supportive of that. So the government was paid $65 million over the 3.5-year period when it was operating. When we meet with government at both levels, provincial and central, the question is, when are we starting this thing? Because we know it makes money. Make sure you've done your work and you've done your studies. Don't sort of just start it up for a few years. Make sure that it's operating for the next 10, 20 years. We believe it will do that. The government's very supportive in saying, well, let's get this thing back up and running. Let's create the jobs. Let's create the downstream process. Let's create a whole new industry where let's put Vietnam on the map for nickel sulphide manufacturing. And let's link it into the battery plant which LG Chem are looking to build. Let's take that nickel all the way through to the battery and into the electric vehicle which VinFast are looking to build. So VinFast are looking to build electric scooters and electric vehicles. So there's a good chance the nickel never leaves the country. It goes all the way through to the battery, into the electric vehicle or scooter, and it's driven around Hanoi for the next 10 years. So there's a really good story there where we've got hydro grid power. We're going to do it sustainably. We're going to do it with as much of that sort of electrical sort of EV low carbon footprint as we can, and then drive it all the way through to the battery. So it's, if anything, it's exceeding our expectations. There's obviously a long way to go, but yeah, it's a great jurisdiction, and the previous owners really, we did our DD and we spoke to a lot of people that have worked at this asset. Everyone that's ever worked at this asset is coming out of the woodworks and saying, tell me when it starts up because I want to go back. So it's a great little mine. We're going to make it into a great big mine one day as well.
Yeah, I think a lot of investors don't quite understand what the mindset of a lot of this sort of advancing, growing economy in Asia is that they do think long term. It's not just China. These guys see this and they can feed on it because, Vietnam is wanting to establish itself more now. This is my feedback from the guys that I deal with there. So the fact that you've got a decent project, as far as we know at this point in time, and a government that's supportive, I think that's quite very important in terms of longevity of your journey as a company. And I find that a lot of investors don't get that yet. They sort of just think, oh yeah, when are you going to do this? The share price gone. I noticed your chart. You went for a run and came back. They lose interest, But it's you're on a long-term journey, and you're going to take that time to get things moving. I think that a lot of people don't quite get how the Asian businessman works in a sense.
Yeah, and it is hard to put a lot of this sort of thing into your presentation or your announcements. And what we've been big on is taking as many people to site as possible. So we've taken, I think, 8 different broking houses to site. So every time that we take a visit,
my name out, mate.
Sorry.
I was waiting. I was checking my emails. I rang INET. I said, "Why is?"
It is a good site visit. But what it does is through that process of visiting site, we give them access to the local government, the provincial government. We give them access to the central government. We give them access to our local partner. So the investors see all this good work that's already been done by the previous owners. We're not taking any credit for that because that was already in place. That's been in place for the last 10 years. So we're just taking over from a really good story that unfortunately caught a tough nickel price and a story that really the previous owners just did not understand the geology or did not take the time, money and effort to go and do some drilling and understand the long-term potential of this asset. So it's a massive opportunity for us because they've done everything right except the geology, and that's what our core strength is. So it's a really interesting situation where all this great work done by previous owners, it's very hard to show the market that, but very quickly we can push this back into production, and that's when the market wakes up. So as this is heading back to production, then the market has to wake up because we'll be in cash flow over the next few years, and the market will go, well, I should have picked some up at 12 cents or whatever it is today. So.
No, I'm a bit more convinced now after talking to the guys there with what they're doing in Laos and seeing all the kind of geology and thing and the potential. They have one project where they've got something is obviously controlled by this big deep-seated regional fault, and then they've got a big skarn there with all sorts of things popping out, and and first I go, oh yeah, you guys are just across the road, and now you guys are talking about all this deep mantle stuff. Well, I'm more than convinced that geology, technically, you got the right thing. I guess the rest of the journey is all the other things that make a project work. In terms of your thoughts on nickel pricing, I think for the last 3 years people have been predicting a run, but it sort of hasn't happened.
Yes. It's funny. It's here, but no one sort of wants to believe it because there's this sort of talk of manipulation in the stockpiles, and is this really the run, or is this just a false start? Like every other commodity we've had, sort of has their little run, and then it looks like that was just a false start. So we went through this with cobalt. So cobalt got ahead of itself, supply kicked in, killed the cobalt price. I don't think we're going to have that similar sort of reaction with the supply. The thing with nickel is that the supply takes a lot longer to kick in. So most of the supply that has to feed this demand has to come from a laterite. So we can turn on a couple of the mothballed laterites, but that's only a certain amount of tons. I'm not sure what the number is, but then we need new laterites and we need new nickel sulphides. Nickel sulphides, there's just none out there. So, but the laterites need circa $1 billion to build. So it's not just the $1 billion you got to find, it's the 4 years of ramping up, trying to hit nameplate, disappointing the market, asking for another $1 billion. We've seen this time and time again over many, many years. That supply that's kicked in say, cobalt or lithium, it's just not going to happen for nickel. So are we at the start of the boom or nickel boom or bull run? I think yes, but there's obviously going to be volatility as we go. I think the one thing we can say is that the battery demand hasn't kicked in. So 5% of the nickel goes into batteries. So still driven by the stainless steel market. So when that nickel demand in batteries kicks in say 3 to 5 years time, that's when the real nickel run happens. So yeah, so I think as a nickel sulphide mining company, we're happy around these levels. So we don't need it to kick into the $20,000 US per tonne range. We're happy anywhere around here. So if anything, we're not too worried where it goes, as long as it sort of doesn't get too far ahead of itself. And at these levels, it definitely hasn't done that. So anywhere sort of between 20 and 25 is probably about fair value over the next 3 to 5 years. $20,000 to $25,000 US a tonne is plenty, and that sort of incentivises some of these laterites to actually be built, but it also doesn't, I suppose, it means that the price isn't ahead of itself and it's manageable. So we're happy anything around these levels up to $20,000 a tonne. As you sort of head above 20, then it sort of incentivises those laterites to be built, which is fine because we need the laterites, because we need the nickel for the batteries. Otherwise, there's just not going to be enough. So we don't mind the laterites being built. We know that they need a higher price, so we're happy. So anywhere around these levels is great. Where's it heading? Yeah, it wouldn't surprise me if we're heading into the $20,000 a tonne range in the next 12 months. But it might get hit back down but between now and when the real demand kicks in for the batteries. So yeah, it'll be a rocky ride, and we're ready, because anywhere around these levels is fine for us.
I guess it always comes from the bread and butter is always the one that puts your meals on the table, right? And the rest is, just for show.
Yes.
Like the old golfing say, putt for dough, drive for show, But
Yeah.
Scott, look, it's great to have this chat again. Thanks for giving us your time. We'll maybe do another one, when you guys got that 4 weeks, and so I'm really interested to see the results. I think you guys have come up with some good results there. I like the area. I think technically you don't have too much to worry about. Maybe market you have a bit, but yeah.
I think we're still in some of the toughest capital markets we've seen for small juniors in a long time. There's a focus on primary capital. So I think generally most guys with a half decent asset can go and raise a bit of money. But what we're finding is it's really hard to get that on market support, and so we've been lucky that some of the retail investors have sort of found us through different channels like this, and that's been great. But it's really hard to get that on market support from your standard sort of broker relationship. But that's fine, because we know we're going to add value. The share price will sort itself out over time. Basically, buy the dips and hold on for the ride.
It's got to be tough, mate. You've got to earn your money.
Exactly.
You got to, you can't be just sitting in the office doing nothing. Right?
Exactly. No, I get out of the office plenty, and I spend a lot of time on the road, and but it's for the shareholders. It's for management. We are the major shareholders, so we're doing it for the benefit of the shareholders. So yeah.
All right. Thanks for your time.
No worries.
Again.
Thanks.
All right.
Cheers.